After months of disruption, there were encouraging signs that vessel traffic through the Strait of Hormuz was beginning to recover. But fresh attacks on commercial shipping, followed by U.S. retaliation, have once again highlighted just how fragile that recovery really is. Joining us to assess what the latest developments mean for global shipping, freight markets, and commodity flows is Tom Beney, Senior Vice President of Ocean Freight at StoneX. Nice to see you again, Tom. Like I said in my intro, before the latest attacks, we were actually beginning to see some traffic through the Strait of Hormuz. How has this latest escalation changed the outlook?
Yeah, well, so I think in general, we always knew it was going to be a slow process. I think ship owners, and particularly private ship owners, need some security to bring those vessels in and out of the Straits of Hormuz. And the Straits of Hormuz has this kind of two channels, one which is close to Iran, and
Hmm.
the other channel which is closer to Oman.
Yeah.
And and so what's happening at the moment is the US naval presence is giving owners a little bit more security. There's occasions where there's an agreement where ships can go in or out,
Hmm.
and this that seems to be happening, but on a very limited basis. And I think the initial thing that happened was that ships came out of the Persian Gulf.
Yeah.
And that brought a flood of ships out. There are ships waiting to go back in. Some have gone back in, some where they have some guarantees either from the Iran side or from the US naval protection. So we're starting to see it come back, the flows, but it's very slow and very sporadic at the moment.
In your opinion, why is this imbalance so significant? The fact that more ships are leaving the Persian Gulf than entering.
Right. So initially, those ships have been in the Persian Gulf since the end of February.
Mhm.
So that you know that getting them out and back into the market has sort of released ships back into the overall market. Those ships were probably loaded and they'll probably go somewhere to discharge.
Yeah.
And so that initial impact on the market can actually be negative. It can increase the supply of ships and start to bring freight rates down.
Mhm.
However, on the tanker side, what we're seeing is that ship owners need some security and some premium to go back into the
Yeah.
Persian Gulf
Hmm.
through the Straits. And so the levels that we've seen over the last 10 days being discussed and even concluded for big VLCCs going back into the Persian Gulf to load crude oil have been extremely high.
Yeah, of
So
course.
the one reported was a vessel being fixed at $460,000 a day, which is a very, very high rate when a normal market rate would have been somewhere around 100,000.
Okay, that's a
So
significant difference.
yes, so uh, in essentially what that means is that ship owners still need security, still need some insurance,
Mhm.
still need um, to know that that vessel and their crews will be safe as they go into load.
So, freight markets reacted very quickly to the disruption. Do you think that current rates are reflecting real supply demand fundamentals, or are they still largely pricing geopolitical risk?
I think there's some geopolitical risk in there, but we have to look at what happened, during the closure of the straits. And what happened was that new routes needed to be developed,
Yeah.
new supplies, new both on the crude oil side and on the clean product side. And so what happened was this sort of inefficiency started to build into the market,
Hmm.
and that soaked up the tonnage because we had to increase the the length of the voyages
Yeah.
for ships to go find products, and that kept the rates pretty high. They dropped off um, as eventually those new supply chains started to get more efficient. The
Hmm.
rates came off again.
Yeah.
Now we have a situation where they're picking up again. Why? Because as new supply comes into the market, new supply of crude out of the Persian Gulf, we will start to see ships now getting pulled back into those trade flows.
Right.
And so there's a massive amount of restocking which needs to be done
Yeah.
in the oil industry.
And those prices are going to be high given the situation. So
Yeah.
if we look at, beyond shipping itself, what does this uncertainty mean for global commodity markets?
Well, I think that there's a lot of discussion about how long it's going to take to get the oil markets back in sync. So essentially, we've lost probably close to 1 billion barrels of oil stocks around the globe overall, and that means that we're going to spend quite a long time resupplying, restocking oil around the globe, and that's going to take time. And I
Mhm.
think so. I think that may mean that we're at a relatively high oil price versus the supply and demand factors for at least another 6 months. And a big factor of that is China,
Yeah.
and how the demand in China will come back because they've been putting restrictions on the refining runs in China and
Mhm.
the export of clean products. So in the oil markets, I think we're gonna see that take a while. On the dry bulk markets, I think what you'll see is a relief that the fertilizer market, and particularly the product urea,
Yeah.
will be back in the markets and be able to start to supply some of those key areas like South America and the US
Hmm.
with urea for the next harvest. But it may be too late because getting that urea in significant quantities into the farming areas is
By the
going to be
time
quite
they need
difficult.
it by, yeah.
Yeah, yeah.
And one last thing, and this is obviously looking outside of the Middle East at weather. El Nino is another potential risk. Why should shipping markets be paying attention to that?
Well, I think the main factor of El Nino for shipping markets is the Panama Canal.
Hmm.
The Panama Canal runs on the level of water in the Gatlin Lakes, so which is fresh water, which is used to fill the locks
Hmm.
as the ships go through the Panama Canal. And so, in a typical El Nino year, you're going to see the rainfall reduce in the Panama region, and therefore the lake levels start to
Yeah,
reduce. And we
yeah.
saw that this week, where um, the Panama Canal Authority announced a reduction in the draft for the Neo-Panamax size to be able to go through the canal due to the water levels. So
Okay.
uh, overall, you may see therefore less cargo being able to carry through the canal
Hmm.
and less transits overall because that means that they use less water.
Yeah.
And so we may see congestion in the Panama Canal build even further than it is today, and that has quite a big impact overall in the distance traveled from the US East Coast into Asia.
Yeah. Tom, thank you very much. Always great talking to you. And thank you for sharing your insights. And a huge thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.